Okay, hello and welcome to the webinar today, Getting Ahead of IR35 Changes in the Private Sector as a Contractor. Just while we're waiting for some more people to join, I'll just take you through the controls. So my name is Gemma, I'm the Marketing Manager here at Qdos. I'm just going to take you through the controls, introduce the speakers, and then I'm going to disappear until the Q&A at the end. So if you are using two screens, the controls can sometimes be on the other screen, so if you can't find them, just have a look on your other one there. If you hover around the top of the window, you'll find a View Options button where you can exit the full screen mode. Normally it's automatically on there, or enter it if it's not. And if you hover around the bottom of your window, you'll find the Q&A button. So we won't be using the raise hand function, so please ignore it. We'll be answering questions at the end, but feel free to submit any during the webinar, so don't forget your questions. We'll send a recording and all the slides at the end, either today or tomorrow, depending. So no need to take notes, or if you need to kind of shoot off halfway through, not a problem at all. And sorry, someone has just asked if it's possible to record this. Yes, I will send that recording, hopefully today, if not by the end of tomorrow. So just hold tight and that will come out to you tomorrow. So we have Seb Maley here, who is our CEO here at Qdos, and he'll be taking you through the new rules and what they really mean for you as a contractor.
Yeah. Good morning, everyone.
And then we have Nicole, Slowey, our Operations Director at Qdos, who'll be taking you through what we're doing here at Qdos, as well as what you can do as a contractor.
Good afternoon, everyone.
And finally, we have Kermode joining us. Welcome, Julia.
Hi, thanks.
Julia is the Chief Executive for the FCSA, the Freelancer and Contractor Services Association, and she'll be taking you through the payment options and what it means to be inside IR35. Okay, so I'll hand over to Seb now.
Okay, good afternoon. It is actually afternoon. Yeah. So I'm Seb. We're coming to you from a very hot office in Leicester. We've seen a lot of webinars and seminars aimed at agencies and clients, but not that many for contractors. So we thought it would be a good idea to give you a bit of an update and hopefully some useful advice ahead of the changes. So I'm sure many of you are well versed in the changes to IR35, but we'll give a brief overview just to go through some of the key points. So in short, from the 6th of April 2020, medium and large companies in the private sector will be tasked with setting the status, the IR35 status of the contractors that they engage. As part of these changes, the IR35 liability, which contractors obviously currently carry in the private sector, will be transferred to the fee-paying party in the supply chain. So this will either be your client if it's a direct contract, or more likely your agency. Similar rules have been in place in the public sector since 2017, with all public sector bodies responsible for administering IR35. The draft legislation for private sector reform was published earlier this month, with the most notable change set for the private sector being the exclusion of small companies. This means that any private sector company that meets two or more of the criteria for a small business will not be tasked with administering IR35 from April next year. A small company can be defined if two of the three factors shown on the screen now apply. When you're working on projects with these small companies as a contractor, you'll retain the right to set your own IR35 status and will remain responsible for taxes, irrespective of whether you work inside or outside the legislation. Following the introduction of the reform in the private sector, agencies in the public sector, agencies and clients began to advertise roles with an expected IR35 status. This is likely to happen in the private sector, and whilst it's not concrete, it can manage expectations. But these determinations will obviously be based on limited factors, and they're not going to take into consideration individual factors such as being in business on your own account. You should therefore expect your client to assess your status after commencing the contract. Reasonable care should be taken. However, there is yet to be a clear definition of this, so it is very much open to interpretation. Clients will usually use HMRC's CES tool, which we'll come back to a bit later, or a third party like Qdos. In some circumstances, however, the status will be determined on limited factors such as the role as opposed to you as an individual. Whilst we do disagree with role assessments being used to determine status in isolation, HMRC have stated that they think it's acceptable and therefore it may end up being commonplace. As per the draft legislation, end clients must provide you with a status determination statement, which must include the decision the client has made on your IR35 status, i.e. if it's inside or outside IR35, and the reasons why. This will be issued to the other parties in the supply chain, like your recruitment agency. Until your client provides this to you, the client will be considered to have failed in their obligations and will therefore be liable for any taxes due. The introduction of a status determination statement could be viewed as HMRC's way of stamping out blanket determinations, which, as many of you will no doubt know, result in all contractors working for one client being placed inside IR35 without a fair or individual assessment of their working practices. Upon receiving the determination statement, if the result is that you are inside IR35 and therefore considered employed for tax purposes, your fee payer, which is usually your recruitment agency, will become your deemed employer and will be required to deduct the relevant tax and national insurance contributions before paying you. In the public sector, some recruitment agencies chose not to engage in this manner and instead required contractors to engage via an umbrella company. When the private sector changes come in, a client-led disagreement process is going to be introduced. This is designed to give contractors an opportunity to overturn what they view as an inaccurate status decision made by their end client. As part of this clause, your end client must respond to your dispute within 45 days to confirm or change its decision along with the reasons behind their decision and, if necessary, provide you, the contractor, with a new status. If they fail to do this, the end client will become the fee payer in HMRC's eyes, meaning they will carry the IR35 liability, assuming they don't already. We've already spotted flaws in this, given that under the draft legislation, the client has the final say regarding status. So if they disagree with your position, their decision is still going to stand. It's a concern, given that HMRC seem to be restricting contractors' freedom to appeal wrongful IR35 determinations made by the end client. The client-led disagreement process is also an indication that HMRC has no intention of getting involved in the process and is obviously reluctant to set up any kind of independent body to oversee it. Currently, contractors can appeal a decision by HMRC in an ADR or a tax tribunal, but under the new rules, this is very much going to be left to organisations with potentially little incentive to remain impartial and obviously no experience historically in applying case law. So Qdos are going to make it very clear in our response to the consultation for the draft legislation that it really isn't a suitable approach to disputing status decisions. So have a look at some of the risks to contractors and look back at some of the things that happened in the public sector. When the public sector reform was enforced in April 2017, a number of public sector bodies, including the NHS, made very knee-jerk and risk-averse IR35 determinations and, in quite a few cases, blanket placed their entire contractor workforce inside IR35 without a fair assessment. This was because in some cases the end client carried the IR35 liability and would be fined if HMRC decided, following investigation, that contractors had been incorrectly working outside the rules. It naturally resulted in contractors being taxed at a similar rate to employees without benefiting from any employment rights. Given that a number of these workers placed inside IR35 were genuinely self-employed and belonged outside legislation, large numbers of contractors left the public sector, choosing instead to work in the private sector, where obviously they could set their own status, or on projects where clients could make well-informed IR35 decisions, and you can't really blame them either. Even though inaccurate status decisions and blanket assessments have really defined public sector changes, HMRC still insisted it was a roaring success. As you can imagine, the tax office measures a rise in tax revenues as a sign IR35 compliance has increased, whereas everyone here knows that simply isn't the case due to a large number of inaccurate status decisions that were made and continue to be made in some extent. For the public sector changes, HMRC introduced an online IR35 testing tool, so Check Employment Status for Tax, or CESS for short. Under instruction from HMRC, a number of clients in the public sector that didn't make blanket determinations unfortunately relied on CESS to set the IR35 status of its contractors. Qdos really urges clients and agencies to avoid using CESS when determining status, and even contractors who are looking to get a firm idea of their own status shouldn't rely on it either. Since its arrival, it's been very heavily criticised for various reasons. It ignores key aspects of the IR35 legislation, which a contractor's status can hinge on, namely mutuality of obligation. It relies very heavily on the right for a contractor to provide a substitute, in most cases classing the worker as inside IR35 if they don't have this right. I mean, in recent court cases, there was one involving Paul Hawksby, who was a TalkSport presenter a couple of weeks ago. He didn't have a right of substitution, and contractors have, in many cases, been classed as outside IR35 without having the right of substitution. The tool gives you an answer after asking a maximum of 16 questions, and that's in stark contrast to an IR35 inquiry where HMRC themselves will ask 50 and sometimes over 100 questions regarding a contractor's working arrangements. The tool's been dismissed in IR35 court cases, which obviously demonstrates it can't be relied on to stand up in court. In reality, it is very much a one-size-fits-all tool that doesn't lend itself to the specific and often very unique details of a contractor's working arrangements. Even an HMRC representative referred to a CESS determination as irrelevant in the recent case of George Mantides. There are articles on both the Mantides case and the Hawksby case on our website if you want to read more about them. Research that we carried out shortly after the arrival of the reform in the public sector showed that 86% of contractors don't trust the tool. I think, like the vast majority of IR35 experts, contractors just don't believe it's capable of delivering accurate IR35 determinations, and that's something that we, as IR35 experts, wholeheartedly agree with. And it's a point that we're making to the agencies and end clients that we're helping to prepare for the incoming changes. HMRC has promised to enhance the tool in the run-up to the private sector changes, but this in itself is cause for concern, and it really begs the question, how can the answers the tool provided in the past stand once the tool has been tweaked? And really the answer is that they can't. Ahead of the introduction of the public sector reform in 2017, we worked with Transport for London, helping them and Hayes, who are the recruitment agency, with both of these parties' new responsibilities. TfL engaged several hundred IT contractors operating through personal service companies, and like many other clients at the time, their starting position was that all workers should be subject to PAYE, so either on their payroll or using an umbrella company, and they effectively told all of their contractors this. Obviously, that caused somewhat of an outcry from contractors, many of whom had already taken a significant amount of due diligence around their own IR35 positions. Alongside Hayes, we went into TfL and had very lengthy discussions about how to compliantly but fairly handle the IR35 determination process. They selected a sample of workers across varying roles, and we carried out detailed reviews of both their written contracts and their working practices. We provided TfL with our opinion of their IR35 statuses and an analysis of how we arrived at that decision, obviously backed by the relevant case law. Ultimately, we assessed all of their IT contractors who were supplied by Hayes, and a large proportion of them fell outside IR35. This is obviously a very different outcome to the original position, and allowed TfL to get through the reform with relatively little disruption to projects. Hayes were also well placed to continue placing contractors outside IR35, safe in the knowledge that the liability they carried as the fee payer was protected. The project was really a success due to well-considered communication along the supply chain between contractors, the agency and the client. It really resulted in transparent, objective and ultimately accurate IR35 assessments, and offered proof that changes to IR35 reform can, in fact, be managed on a large scale and when it matters. Contractors, understandably, worry that inexperienced clients and agencies could make incorrect decisions regarding their status, which would mean that as an independent worker, you would be taxed effectively as an employee. Concerns have been raised that the reform will spell the end of contracting. I think whilst IR35 changes certainly pose a challenge to engagers, the flexibility and the skills that independent workers offer firms and the growing reliance these companies have on contractors suggests this definitely isn't going to be the case. Some firms, such as HSBC, reportedly plan on banning a contracting workforce, but this is a really extreme measure, and it's not one that we expect will be widespread. You may have read one or two reports regarding private sector's firms' plans to offer contractors no choice but to work as an employee or through umbrella companies as clients look to avoid the need to administer IR35. If this materialises, it would mean contractors can't operate outside IR35 with these companies. We are, however, keen to stress that the value of independent workers to end clients and agencies means that it's a course of action that might only be taken by a handful of companies, and by all accounts, it would definitely be a short-sighted strategy that would definitely backfire as well. So I'm going to pass over to Nicole.
So thinking about getting ahead of the legislation change coming April 2020 next year, I thought it would be quite useful just to give you an update on what Qdos are actually doing in the market by way of the work and the effort that we're putting in at agency side and client side as a means of making sure that there is a consistent and compliant approach to managing IR35 reform in the private sector. So at the moment, we are working with 80 plus clients and recruitment agencies across a variety of industry sectors, looking to help them prepare with reform. We're advising them on the importance of being able to make and contribute to well-informed and ultimately accurate IR35 assessments, which will see for the fair and contingent use of contractors outside of IR35. Again, to add to some of the points that Seb made earlier, we're really stressing that point about actually making individual assessments and making the assessments on a case-by-case basis. Our track record in providing IR35 defence to contractors, where we have successfully won over 1,500 cases and actually only had 3 where contractors were found to be inside IR35, that gives us the ability to reinforce that point from a perspective of absolute experience, and that if agencies or clients are thinking about blanket determining contractors inside IR35, it's a massive mistake for them commercially, reputationally, and even from a compliance perspective. I think it's important when looking at this that whilst HMRC are talking about role assessments being considered a compliant approach, we would always reinforce the point that you need to look at assessing contractors on an individual basis to ensure that you're not running the risk of making mistakes, making assumptions that all individual contractors working in the same role operate in the same way and that they have similar arrangements as to how they're in business or on an account. And when it comes to actually in an IR35 investigation scenario, all of the facts in the round are considered, and I think that we're working very hard to bring that awareness to the client and agency market. Again, further to that, we're discouraging the use of theft. Again, lots of organisations in that space don't actually realise that it's not a mandatory tool. It is in fact only there as a means of guidance for HMRC, despite the fact of what they try to position it and how they try to position it from a PR perspective. And again, it's about thinking around the actual IR35 determination making process and ensuring that each contractor has the opportunity to have their IR35 status individually assessed. We are working with recruitment agencies and clients in positioning the facility that we can help to support that, whereby via our status review platform, we can actually administer the individual assessments of contractors where an expert and objective third party is participating in that process, the contractor is involved in that process, as is the client, positioning a very fair and transparent process that meets everyone's obligations under the legislation as well. As part of that, the system automatically issues what will now be required as the status determination statement, giving everyone in the supply chain the detail of that determination that's been made, as well as the rationale behind that determination. Again, in terms of thinking about the position that clients are taking as far as actually dedicated resource to IR35, we're helping organisations do that, and by way of the training packages and the communication packages that we have designed, we're helping HR teams, supply chain, procurement properly understand the legislation, along with the importance of how they're going to manage that practically within the business, to the benefits of their organisations, their supplier organisations, and fundamentally their contractors. Again, the importance of actually starting now for clients and agencies cannot be stressed anymore. We are not that far away from the legislation now, and the countdown is certainly on. And I think that many outlets in the media are highlighting some of the mistakes made in the public sector. They're talking about potential mistakes in the private sector. But we are definitely confident in organisations' abilities to get ahead of the legislation, start making those preparations and undertake thorough due diligence that can ensure for the continued and fair use of contractors in the market. I think that it is important to add a bit of reality to the conversation, in that there are a number of private sector firms who will, in their mind, take an appropriate risk-averse approach to the changes, which might see them potentially making that decision to step away from contractors in the HSBC example that we give. But I think that the discussions that we're having with clients is seeing that they are at least looking to consider what all of their options are and understand that the value that contractors bring to their organisations, and take a pragmatic approach to managing the legislation. So in terms of what you as contractors can do yourself, whilst the responsibility is moving away from you from April next year as far as actually determining your IR35 status, you aren't entirely powerless in that. And there are a couple of steps that you can start to take now to help best position you for those discussions and determination exercises that you're going to go through with your clients and agencies in the lead up to next April. I think the most important thing is not to panic. Whilst, yes, the prospect of being placed inside IR35 is unattractive, especially if you are potentially genuinely operating as a self-employed individual and should be considered outside of the rules. But by taking the right steps, you could be prepared for those discussions and have yourself armed with the necessary information and analysis and evidence to have very well informed conversations with your clients. So I think that really takes us on to the point around you working with your clients. Don't wait for your clients to come to you. I think that it's important that you take a proactive approach in having those discussions in terms of understanding what the client's view is of the legislation, what it's doing as part of its preparation. And it may be at this stage that there isn't anything that they can concretely give you, but it definitely gives you the opportunity to ascertain where they're at. So for example, if they are part of the way through a project plan, they have appointed a cross-working party group. And certainly with all the discussions that we're having with clients and agencies, we are promoting that the communication with the contractor population is absolutely key right the way throughout the preparation of the legislation, because they can certainly glean a huge amount from their contractor bases as far as how best they can look to structure and shape that reform. Alarmingly, a survey that we conducted a couple of months ago actually suggested that 92% of contractors haven't yet had or been contacted by the recruitment agency or their clients in respect of the changes. Now, like I said, this is contrary to the advice that we're giving client organisations, as like I said, it's very important to ensure that everyone in the supply chain is working together as a means of designing these appropriate solutions or appropriate processes for actually administering the legislation. And I think it's important for contractors not to be put off or scared or frightened of actually having conversations with your clients around that. Having your own status reviewed, again, is a really important aspect that you can take into consideration when you're trying to think about how you can prepare for the reform being introduced next year. I think that, yes, it's vital having those discussions at the outset with your clients as to what their plans are and what they're going to do is a fantastic first step. But what you definitely want to have as part of that is a confident and thorough understanding of the actual position of your own status at the moment, so that as and when you go through an assessment exercise with your clients, and if that determination either you think isn't made fairly, isn't made accurately, then you're at least armed with information and evidence which could support a potential challenge and potentially see a positive resolution to a determination that perhaps saw you being considered incorrectly inside of IR35. Whilst it's the clients that will have the final say when it comes to determining your IR35 status, anything that you can do to substantiate an argument or a point that you want to make on that, where you have had that undertaken by an expert like us, like Qdos, or other means, can definitely be considered to have more weight than perhaps if you haven't actually taken the steps to establish that and have an expert give you an opinion on your current arrangement. When it comes to thinking about the retrospective risk and if contractors will carry risk post-April 2020, you will carry the risk for the retrospective years trading up until the 6th of April 2020. HMRC have stated, and they did so as part of the budget announcement in 2018, that they will not carry out targeted campaigns into contractors where their status has been determined inside of IR35 under the new rules, which you would have thought should have given a substantial amount of comfort to the market and to contractors that they may not be at risk of a retrospective investigation. But unfortunately, there are reports that a few isolated cases in the public sector have actually seen HMRC do just that. So again, that just adds to the point around ensuring that you have and are armed with the relevant evidence and information around your actual status, and should that eventuality actually come to fruition. Collect evidence. You haven't gone through the process of having your status determined by an expert is a great first step as part of an evidence pack in terms of having your contract assessed, having your working practices assessed. And I think that in addition to that, you want to consider other aspects of information and the peripheral details which further substantiates that you're actually operating as a limited company, self-employed contractor. So again, there is the importance of having your working practices assessed and understanding the specifics of that from a status perspective, but it's also worthwhile looking at things like such as financial risk. So in the event of you making a mistake in the delivery of your services to your client, do you have to correct that and fix that at your own cost and in your own time? Again, a brilliant example of support in that is that if you have your own business insurances in place. Similarly, if you're using your own equipment, whilst not a definitive factor on its own, that can again point to that self-employed structure where you are operating as a business in your own account. And that sort of extends to other things such as having your own office premises, your own address, your own company website and company stationery. Above all else, for contractors to be positioned genuinely outside of IR35 and to be able to continue paying themselves via their limited companies, it's important that all of these factors fall in line as far as what it looks like to be a true self-employed individual. And by going through the motions of having your status determined, thinking about the evidence in the wider sense, will give you a proper picture of what that could look like when it comes to you actually undergoing an assessment by your client. Now, in terms of what the consequences of an assessment by your client could mean if you were perhaps determined inside of IR35, what you want to start to think about is on what basis would you be prepared to operate going forward. And I think whilst, like we said, it's not an attractive option to think about perhaps operating inside IR35 and having to think about potential rate reductions and having to bear costs that you haven't previously before, you do need to think about what potential conversations you're likely to have with clients. So is it around thinking about what is the absolute minimum day rate could you operate to if you were deemed inside IR35? Because that could be a discussion that you may be having with your client and your recruitment agency in the coming months. Lots of contractors operating in the public sector were placed inside IR35 actually sought to increase their rates as part of their strategy for managing IR35 in their own personal circumstances. Whilst I wouldn't say that happened in a large volume of cases, it's definitely worth thinking about as far as how you're going to structure those discussions with your clients and demonstrating your value to that particular client organisation. Then think about things like umbrella companies and working on a PAYE basis with your recruitment agencies. Or similarly, are you willing to consider an employment option with your client? Now, we've got the benefit of having Julia here today, who's going to cover off what that means from a payment perspective and how it looks like to be considered inside IR35, because I know that with the majority of our customer base being in that limited company structure, having to consider umbrella options and agency PAYE options are something that are completely new to us. So I will pass over to Julia, who will take you through some of the more finer details of the trading options and the financials.
Great, lovely, thank you, Nicole. So yeah, what does it actually mean to be inside IR35? Well, first and foremost, employers' national insurance needs to be paid, and that needs to be factored into the cost of your assignment somewhere. The fee payer, which is the body that is going to pay you, is actually responsible for PAYE and national insurance contributions, but you need to be aware of the employer's mix, especially because what we've seen in the public sector is a variety of approaches taken in terms of paying the employer's mix. And I think the legislation actually intends for the employer's mix to be paid on top, but that wasn't always the case. So I'm going to take you through a few observations and help equip you for those conversations. But basically, in a nutshell, it means your assignment rate will be taxed, and it means that your income potentially will reduce. And what does that mean for you? As Nicole said, are you going to look to increase your rates or renegotiate your contract, or indeed are you going to consider leaving your current role? And FCSA has done some research into the kind of current state of the contractor marketplace at the moment, and the feedback we're getting is that there is a lack of decision-making information and that there's confusion around people making plans. And what we found in our survey of around 500 or so contractors, some of whom work in limited companies, some of whom are sole traders, and some of whom were in partnerships, was that actually only 41% of those that we asked feel that they've got enough information to start making plans for next year. And surprisingly, of those with plans, 37% of them were sole traders. Now that's surprising because the IR35 legislation is not intended to affect sole traders at all, and so that is a concern, because sole traders don't need to be making plans at all. Our research also told us that only 1 in 8 of the people we asked are actually prepared to work inside or outside IR35. And for those that are prepared to work inside or outside of IR35, most of them have been in business for less than 2 years. So 53% of those considering they might work in or out have been in business less than 2 years, as compared to the survey average of 37% being in business less than 2 years. So that's quite interesting. We're not sure of the reasons behind that. And the other interesting point is also more females than men are prepared to work inside or outside IR35. So just some interesting insights there. And the last bit on our research is that actually early indicators are suggesting a loss of 1 in 8 personal service companies, and with our analysis has shown that 6% are considering leaving as a contractor to become a permanent or consider full-time employment. 3% are considering early retirement, and 4% are considering working overseas. And so that's a loss of 13% of the contractor population, which in terms of PSCs would be up to 78,000 people, based on our analysis of there being around 600,000 PSCs in the UK at the moment. So inside IR35, what next? If you are considered inside IR35, first and foremost, you can still work through your personal service company. And if you do, you would still invoice for your work done, and that would be paid. The net amount of your invoice is paid as employment income. So you would issue your invoice and you would charge VAT on the invoice. That VAT is paid, and then the net amount is treated as employment income, which would have national insurance, apprenticeship levy, etc. And one of the points to bear in mind is that although you've previously been in a business-to-business arrangement, the changes mean that in order to be paid through payroll, you're going to have to provide national insurance number, tax code, and different identity documents in order to be paid through PAYE. So that's a bit of a change, and I know not everyone is happy about that, but unfortunately that's going to be the way it is. Some people have asked, what's the impact on my income? And I've got a couple of figures here, which is just PAYE figures. So there's loads of online calculators you can go to input your tax code to get specific answers. But if you're on an annual salary, if you were an employee of about 100,000, 33% of that you can expect to go on tax, and so that's a big loss. If you were on 75,000 a year, it would be around 30% you would lose on tax. And so those figures, if 75,000 a year is about £43 an hour or £332 a day. 100,000 a year is equivalent to around £60 an hour or £470 a day. So it's just to give you some insight of the potential impact on your income there. So in terms of the practicalities, as I say, you would issue your invoice, the VAT is paid, the net amount that's left goes to payroll for processing via PAYE. And what it means for whoever is paying you is that their accounts and payroll systems will need to effectively talk to each other, which is, in a sense, their problem, but something to be aware of, that it's complicated for them to administer. What it also means for you is that your invoices are issued but never paid in full, because the net amount is taxed at source. Your accountants can help sort all this out from an accountancy perspective, by the way. It does also mean that the 5% expenses allowance that you've always had will be removed. Fortunately, there will be, it won't be possible to be double taxed. So the income that is taxed as employment income won't be retaxed as corporation tax at the end of the year. So basically, if it's been taxed once, it can't be taxed again. And there's, as I say, your accountant will be able to help with the guidance there to make sure everything is offset properly. As I said earlier, you can still be paid into your personal service company, and that can be done alongside PAYE through your recruitment agency. So they would be paying the VAT and then processing the net through their payroll, or your end client can do that. And there are also some options without your personal service company, which would be employment or umbrella employment or being an agency or temporary worker. It might be the first time any of you have considered umbrella. So what actually is an umbrella? It's sometimes a strange concept when you first come across it, but basically an umbrella company is an employer of contractors. So they will employ you on a normal contract of employment. So you will become an employee of that umbrella. And what that means is you will receive all employment benefits, all 84 statutory rights and benefits, but it also means that you will have the flexibility of working for different end clients or different recruitment agencies. And so you've got the freedom to undertake a series of temporary assignments whilst having the benefits of being employed. And a very simple illustration of the supply chain here, just to show the contract. So worker on the left has a contract of employment with the umbrella. The umbrella has a contract for services with the agency, if there is one, and then the agency has a contract of services with your client. And the agents, there might not necessarily always be an agency in there. So that just shows the contractual relationship there. I've already really covered off the benefits to you for having an umbrella. As I say, all employment rights, tax and national insurance is paid, which means you don't have to do a self-assessment tax return at the end of the year. You should be getting all employee and HR support as you would for any other permanent employment. And a number of umbrellas also provide extra benefits that are specific to them, like reward schemes, health insurance, gym membership, etc. And just to note that we have seen an increase in the use of umbrellas in the public sector. The reason for that is because they employ you, then there is that effectively means that they don't need to necessarily consider IR35. So by being employed by an umbrella, you're obviously employed and therefore very firmly inside IR35. So it's a potential solution. Importantly, if you're considering working through an umbrella, you need to understand that the amount of money that umbrella is paid, either by your client or by your recruitment agency, includes employers' national insurance. And so you need to make sure that the rate you are told you will earn is the rate that is left once the umbrella's employment costs and the employer's national insurance has been taken off. And that's a really important point to make sure you're clear about how you're being paid, which is the umbrella rate, which includes all of their overheads, and which is your gross pay rate. So you need that clarity. Fortunately, there are some changes coming in next year which will affect recruitment agencies, which mean they have to provide key information documents to everyone working through a recruitment agency. So it should be clarified at the outset for you, but it's worth being aware of that. So hallmarks of a compliant umbrella, they pay 100% of your wages through PAYE. They will employ you. They provide you with all statutory rights. They cover off the legal elements such as AWR, national minimum wage, holiday pay, etc. And you might be sitting there thinking, why is she telling me all of this? Unfortunately, there are some companies out there that suggest that they're umbrella, but actually they can be tax avoidance schemes. And we have seen an increase in tax avoidance schemes, specifically targeting contractors in the public sector, and we expect to see the same next year when these changes come in. So you need to be very aware of any umbrella that you are considering to be employed by, and make sure that they are going to genuinely employ you, and make sure that they are not one of these schemes that are listed here. Basically, in basic terms, disguised remuneration schemes work by paying a small proportion of your income as through PAYE, and it's such a small amount that it doesn't really incur any tax or national insurance. and then the remainder is paid as something else, which might be a loan, it might be shares, it might be annuities, or anything like that. The scheme providers will tell you that that second payment is not taxable. In reality, HMRC will view it as employment income, and their view will be that it is taxable, and HMRC are likely to catch up with you personally, not the scheme provider, and require you to pay the tax that hasn't been paid, the tax and national insurance that hasn't been paid on that portion of your income. So all you need to take from this is make sure that any umbrella that is paying you is paying 100% of your wages through PAYE. Anything that is offering you two different payments, with one being taxed in one way and one not being taxed, is a concern, and you want to be very careful before signing up to that. These scheme providers have all sorts of marketing tricks up their sleeves. They're incredibly convincing, and it's very easy to be duped by them. This slide just lists a few of the things that we've seen, and they are all completely untrue. And HMRC issues very regularly warnings about these disguised remuneration schemes. There was a new warning issued just this week about a particular one. So really, if you take nothing else from what I've said, just be very, very careful about what you're potentially signing up to.
Thanks for that, Julia. So I think just to kind of conclude the webinar discussion this afternoon is a U-turn or a further delay of the legislation is looking unlikely. We had the publication of the draft legislation on the 11th of this month, which again sets out that the legislation is coming April 2020 next year. I think that even after the lobbying efforts that some organisations have made and that things can continue through that way, our advice to everyone in the supply chain is that you need to start to prepare now. For contractors, it's about preparing as much as you possibly can for the arrival of the legislation next year. And I think for anyone really to rest their hopes on there being a delay or an out-and-out U-turn is too big of a risk to take. Whilst you've got every right to be concerned about the changes next year, we're confident that the changes can be managed pragmatically and practically by both client organisations and recruitment organisations, and we're doing everything that we can through that space to ensure that that happens with the organisations that we certainly work with and advise. I think that it's important to recognise that clients are taking reform seriously. It is a legislative change. Clients have new responsibilities. Your fee payers and agencies have new responsibilities. It's not about apportioning blame in any which way at all. It's just about working cohesively and together to the point where people are accurately having their IR35 status determined and that businesses are taking their responsibilities seriously under the legislation going forward, and that compliance is ultimately at the heart of the activities that your clients and your recruitment agencies will actually be asking you to participate in. So I think we will stop the webinar there and we'll pass back over to Gemma to field out our question session.
Lovely, thank you everyone. Yes, so we'll move on to the Q&A portion of the webinar. I can already see that there are lots of questions coming through. Sorry, let me just get my mouse working. I've also received a lot of emails in advance of the webinar. If you've not received a response from me already, you will do. Please just bear with me. There were over 1,000 people registered on this webinar, so you can just imagine how many emails I've had over the last week. So you will get an answer even if you don't feel like you've got a response today. So just a couple of really common ones that I have received already. I'll just paraphrase them a little bit as they were quite similar. One of the most common ones was that if you are currently working outside of IR35 and your client puts you inside IR35, or you go permanent with that client, what are the risks of HMRC opening an investigation?
I think Nicole covered that in her part of the presentation, didn't you?
Yes.
So HMRC have explicitly said effectively that they're not going to pursue people retrospectively, but we have seen some instances of that actually actually happening in the public sector for contractors who were determined as being inside and facing a challenge retrospectively from HMRC. So I think it's better to be safe than sorry.
Okay. Another common one was around if the client was overseas and how that impacts the rules.
So if the client is overseas, so if it's a non-UK entity that you're working for, obviously there is jurisdiction that HMRC have, and that's limited to the UK. So what would happen there is that the responsibility for determining IR35 status would move up the chain to the next party, assuming that they are in the UK. So a non-UK client would not have the responsibility or legal responsibility for making determinations.
Okay. I had a question from Edward. How can one check whether a company is classed as small according to the Companies Act 2006? I can see definitions on the government website. I can check the latest company accounts, but is there a simpler way?
I think that as part of the legislation, draft legislation that was published, HMRC did say that they were going to issue some further guidance around certain aspects, and that there was likely to be something in there around how to help contractors identify where they're as a small company. But I think that the challenge really is that that is really your own means of resource by referring to Companies House and looking at accounts that have been published by your clients. In order to ascertain their value, and that's quite simply a process that they themselves are going to have to go through as part of actually asserting themselves as an organisation who actually at the moment doesn't have a part to play in the determining of IR35 status for the contractors that engage you.
Okay. Phil also asked, in terms of Qdos specific products, how will assessments, tax liability cover and similar be impacted by these changes?
Obviously, we are carrying out assessments for agencies and clients now. So there's an element of repositioning our services there and expanding our services. Naturally, contractors will still or may still need to have their state or want to take due diligence around their IR35 status post April next year. So our full range of kind of assessment and review services will still be available. I think from the perspective of the TLC and the tax insurance policies that we offer, naturally from the 6th of April next year, for contracts going beyond that, there isn't a direct IR35 risk for contractors, so there isn't a potential IR35 liability. There will be a retrospective liability for any contracts predating the 6th of April 2020. And obviously, contractors operating a PSC are still at risk of other types of tax investigation. It is just purely the IR35 element that would no longer be a risk.
Okay. Thomas asked, if there is more than one director in the limited company, what kind of impact has that for each director under the new IR35 rules?
When it comes to considering the IR35 status of the services that are delivered by a PSC, it is on a contract-by-contract basis. So if those services are being delivered by one director of a company and the other director are providing other services, then each of those instances would be considered on their own merit on each of their own cases. So it's important that as part of that, even if you have joint directorships within the organisation, that you look to establish the status and the evidence and the review exercise on each of your own engagements and each of your own contracts. As the fact that there are two directors within the company doesn't necessarily have an impact from an IR35 perspective at all.
Okay. So an anonymous attendee has asked, any chance Boris Johnson might lead U-turn for IR35?
A question that we've probably had quite a lot in the last 24 to 48 hours. I think that everyone in the market sort of maintains that the only thing that could see a U-turn in the legislation was a change in government. We've obviously now have that with Boris being our new PM and with us having a new Chancellor. I think just from a kind of a personal perspective, with everything that's going on with the very much talked about Brexit, I think that the government's attention will be certainly elsewhere. And I think that as part of all of the information that's been presented from HMRC and the Treasury as to the success of public sector legislation, that there's not much of a case for them to introduce a delay or a U-turn or a halt. But I think In that sort of space, you can never say never, given the political climate, but we would very much urge contractors and organisations to prepare for the changes coming in next year.
Okay. Patrick has asked, I normally work away from home during the week and incur significant travel and accommodation costs. Will there be any relief for these costs?
I think if you're still able to operate outside IR35, which we hope the majority of contractors will be, then yes, I mean, nothing changes. However, if you are inside IR35, then no, travel and subsistence in terms of home to site is restricted, and the same applies for umbrella companies, doesn't it, Julie?
Yes, yeah. So the vast majority of umbrella company employees will not be able to claim tax relief on those travel expenses.
Okay, thank you. Another anonymous has asked, what is the advantage of going through an umbrella? Is the tax position reduced? If so, how?
The main advantage of going through an umbrella is that they will employ you, and so you'll get 84 statutory benefits and rights of employment as compared to being an agency worker. I think you would get, I know workers have 29 statutory benefits. So the umbrella will give you continuity of employment whilst you work on numerous different assignments. You could potentially have some assignments that are inside IR35 and work through an umbrella on those, and then some that are outside IR35 that you might work for your personal service company on. But basically the umbrella is an employer of contractors. They do it at scale, and they often will also have an accountancy arm to their business that can advise you on the accountancy side for your personal service company. So you might find some that can help you in both and flip you into umbrella when required and out again when you're outside IR35.
Okay, great. So I'm skimming through the questions a little bit just to make sure we're not asking the same one. So one person has asked, bear with me, so this was an anonymous, is the end client obliged to provide a signed document to the contractor that they are operating outside IR35?
Well, they're obliged to provide a status determination statement, which effectively is a legal document confirming the status. I don't think there's any reference to whether that needs to be signed or not, but ultimately that will be the document which formally carries a contractor's status.
So Amit has asked, what about corporation tax, which is already paid for previous years, if HMRC wanted to query previous years for IR35 calculation?
As part of any sort of IR35 investigation and going through that, the motions of that, if you were to be investigated for years prior to April 2020, any tax consultant who would be working on your defence as part of that should be subject to an HMRC inquiry, and if actually found to be inside of IR35, your tax consultant would consider the options of a corporation tax offset for monies that have already been paid to the revenue under corporation taxes to ensure that you're not paying double taxation and that you're only paying the monies that are actually already due based on the tax that relates to the services that you've provided and taxes already paid. So any tax consultant or accountant that's working with you on an investigation should help you with that as part of any deemed payment calculation that arises out of that investigation.
Okay. Philip has asked, if a PSC is inside IR35, would the deductions at source include both employers and employees' national insurance? Can I still take subsistence and travel expenses?
So I think we covered the travel and subsistence question earlier, so the answer is no if inside IR35. But in terms of the deduction at source, so yes, it would include both employers and employees and employers and I. Well, the deduction, they wouldn't deduct employers' national insurance if it was being done properly. That would be added onto the rate. In terms of an inside IR35 payroll, unlike an umbrella company.
Yeah, the legislation intended for the employer's national insurance to be paid on top of the agreed assignment rate by the employer or the fee payer, but that hasn't always been the case throughout. So when you're looking at working inside IR35, you need to be really clear to make sure you understand what is going to be effectively your gross pay, and make sure that somewhere in the contractual supply chain that they are factoring in those costs of employment, so the employer's national insurance.
Okay. So another anonymous attendee has asked, it's great that Qdos is actively engaging with 80+ clients, but there are hundreds more out there. Are you planning on reaching out further? Is anyone else engaging with them like IPSI and the SCSA?
So I think from the Qdos perspective, yes, we certainly are. We are speaking to numerous new clients to us every day and every week, and our team of our tax team, our commercial team, our operations team are working hard to ensure that we are spreading that consistent message and working with organisations to help them with that essential support. So we will continue in our efforts in doing that right the way up to the introduction of the legislation, and I'm sure that Julia can also speak from the MCSA's perspective on that question as well.
Yeah, likewise, we're doing as much as we possibly can to help get the messages out to clients, and we also work closely with CBI, and a lot of their members are obviously getting ready for IR35 changes, of payroll changes rather, next year. So we're doing as much as we can. It's really, as you say, there are hundreds and hundreds of clients out there, so it is quite difficult to target everyone, but I do know that we're doing as much as we can. Qdos are, I can't speak on behalf of IPSA, but from my dealings with them, I'm 99.9% certain they are as well. So trust me, you've got a lot of people acting in your best interest.
Okay, thank you. So another anonymous one, if the current contract is outside of IR35, why would the end client decide it's inside now just because they have to do the termination, assuming exactly the same contract, working practices and nature of work?
I think that the balance of that is whether your client is currently aware that that contract is outside of IR35. So up until now, it hasn't been their responsibility to make determinations on the contractors that they engage. And I think that further strengthens the point around contractors being able to use the evidence that they have by way of the reviews that they've had undertaken to share and inform and educate clients. That again, where clients and agencies are looking to take a proactive and positive approach, they're actually taking that under assessment on a case-by-case basis, and what is outside of IR35 today, if assessed correctly, should still be assessed as outside of IR35 tomorrow. But there is always that risk that some clients may take that and their eyes most risk-averse approach in considering that. But ultimately, clients need to take reasonable care when arriving at determinations, so they should be making accurate assessments on your specific circumstances.
Thank you. Okay, so I'll make this the last one as we're running out of time now. This is a question from Chistia. Really sorry if I'm saying your name wrong. If we want Qdos to reach out to an agency or client that you're with, start having conversations on the importance of not putting a blanket decision, putting contractors within IR35, what would be the procedure? We, as you'd expect, more than happy to speak to the clients and agencies over contractors who are customers of ours, and happy to work with that. So it's simply just a case of, if you're an existing contractor client, getting in touch with your account manager, who will put you through to the relevant people in my team and myself, and we will be the individuals who go forward and have discussions with those client organisations as part of that, as part of the information that will be sent out as a follow-up to the webinar. Obviously had our contact information and communication information on there, so you can more than welcome to get in touch with those introductions and discussions that you would like to have. Okay, great, thank you. Okay, so we'll end the webinar there. There are a lot of questions coming through. Hopefully most of them have been answered throughout the webinar, or someone else has asked the same question that we've answered as well. If you still feel like you have not got the answer to your question, please get in touch. We are here to provide you with the answer to your questions. We don't want you sitting there wondering what's going on. So do just get in touch with us. We will respond to them. Normally I would just do that automatically, but there is so many of you, it will take me forever to get those recordings out to you. I will send those recordings and the slides out to you by the end of tomorrow, but hopefully today. So yeah, thank you very much for listening, and thank you to Julia for coming in, and Seb and Nicole. Thanks.
Thank you.
Thanks.